Gold. What colossal central bank buying may mean. I'm Bob Stokes with Elliott International. Central banks have been scooping up gold with a vengeance. Here's a January 31st Financial Times headline. Colossal central bank buying drives gold demand to decade high. Interestingly, just a few days later, on February 3rd, the precious metal dropped by more than 2%. But setting aside near-term price moves, what you need to know is that government is nearly always the last to act on a financial trend. In other words, when government acts, a trend is either nearly or already over. In the case of gold, consider that central banks were furiously buying it in mid-2011. As you may recall, gold had been strongly rallying. Well, just 3 months later, in September of that year, gold hit a top and fell 46% during the next 4 years. Going back in history a little further to around 1999 and 2000, there was the gold selling episode, which amusingly came to be known as Brown's Bottom, referring to Britain's Chancellor of the Exchequer at the time, Gordon Brown. Brown was fervently selling from Britain's gold reserves after gold had been in a multi-year downtrend. You no doubt know the rest of the story. After Brown's gold selling, the precious metal then entered a multi-year uptrend. But let's get back to the present, namely an instructive chart and commentary from our recently published February 2023 Elliott Financial Forecast. Central banks are so confident that gold prices will continue rising that they are committing generational amounts to its purchase. Central bank behavior is not a short-term timing tool, but it does provide key input for judging sentiment, which appears strongly bullish. If you would like to get near-term analysis of gold, as well as more of this broader perspective, you can find it in our financial forecast service. Just follow the link below this video to learn more.